Hey, aloha, this is Larry Gonzales with your housing market update for the week of 23 January. We had a great weekend. My Niners won. I love it. Big game this weekend, their biggest challenge of the year. All right, but let's talk about the market because that's what you care about. I know it. All right, so big three, prices, steady. But, I'll get into this later. Inventory, steady to lower, but that's normal. And there's a bigger but. And then rates down. Rates are down at a 4-month low. And by Friday, if the PCE comes out lower than expected, expect those rates to go even lower. And we will be squarely in the fives on both a 30-year conventional fixed rate and VA. And that, my friends, is very good news. But I will tell you this, I don't expect us to get much lower for probably the next 3 to 4 months just because the inflation that we've seen drop, I think that's going to steady out, and we're not going to get the counter readings like we have these last couple months. All right, so what's going on in the market? All right, mortgage apps. Let's talk about that. Let's look at everything from a supply-demand figure. All right, supply-demand, that's economics, laws of supply and demand. Mortgage apps, last week, 4% rise. We had a 25% increase in mortgage applications last week. 25%. Dang, what's going on? All those hibernating buyers are coming back. Why? Because rates are going lower. That is big news. So, demand is up. All right, rates are at 4-month lows. Expect them to go a little lower and steady out for a while. Again, our drop in rates is not going to be a straight drop. It's going to be rocky. It's going to go lower, I believe, this by Friday. What does that do? Doesn't help me with supply. Helps me with demand. That gets more people out in the streets, out at open houses. All right, and then we had a big report come out on Friday, existing home sales report. This is past news. It's for December. I tell you what, 4 million home sales in December. That is a 2.5 million drop from the peak in January. You look at this chart. We have not been this low existing home sales since 2011. Taken aside, obviously, excluding the brief period in 2020 when we started the pandemic and housing sales drop period. Existing home sales are at a low. And why is that? Inventory and rates. Homes that closed in December, they went into contract when rates were at their peak. So are we at the nadir? Are we at the dip? All right, is it going to start going up? Big news on that existing home sales report. Other things that came out of that existing home sales report that I tell you what are really kind of big indicators of what's going on. All right, first-time home buyers went up from 30 to 31% of sales. Nobody wants to live with their parents forever. I don't care who you are. I don't want to live with my parents forever. Matter of fact, I haven't in forever. And first-time home buyers are still in the market. They haven't given up. Here's the other crazy thing. Look at this, though. Cash sales. 28% cash sales. Well, some people still have money. Hey, here's kind of the other big thing. Not a lot of distressed sales. Foreclosures, short sales, we're not there yet. We're not going to be there until the labor market takes a dump. I really don't see that happening. All right? When people lose jobs and they can't pay their mortgage, they either sell their home or they keep it and they go into foreclosure. All right? I think they'll sell rather than go into foreclosure. Not as many investors. And I tell you what, government service enterprises, the government, all right, they are going to make it more difficult starting in May for investors in second home purchases. They are doing everything they possibly, actually they're not doing everything they possibly can. What they are doing is trying something that's not going to work. It's not going to work because we got ways around it to buy second homes and investment properties. But they are making it more expensive starting in May, which means all the lenders are going to probably start in March and April, increasing the price and the fees to buy second and investment properties. But if you got cash, no matter. Cash is king, and we still have a lot of cash buyers out there. Here's a big telling thing, days on the market. This last year, man, we've been in the teens on days on the market. It was ugly. You put a home on the market within 7 days in Hawaii, that home was in escrow. All right, that has changed. We're almost up to 30 days on the market. This is nationwide, but it depends on the home, depends on location. All right, we're seeing those numbers pretty high. That's a big difference. That report was huge report. The next thing I want to talk about is recession. The leading economic index, the Conference Board, they're a nonpartisan economic group that they look at really several different things. They look at stocks. They look at, if you look at the charts, they look at the stock market, our financials. They look at the labor market. They look at manufacturing. They look at housing. December, we had a 1% drop. That followed a November drop of 1.1%. 10 months in a row where we have had a drop in the leading economic index. Look at all these numbers. They're all going down or showing negative. What does that mean, though? Well, the leading economic index, it's an indicator. It is an indicator just like the 2-year, 10-year Treasury is. Look at this, looking at this chart. Every time that we've gone, this is a really good chart. It shows kind of we skip warning and we go right into recession. All right, when we get to a negative 5%. And December 2022, we were there. We were squarely in it. Really, we've been in it. We peaked in December of 2021. All right, and every time we've gotten in this recession signal, guess what? We've gone to recession. Recession in 2008. Obviously, there was a little recession in 2020, and then the dot-com in 2000. Leading economic index. Let's look at this long term. You look at the peaks. Every time the leading economic index peaks, within 12 months, we go into recession. You got 2020. That's kind of an anomaly. But you got 2008. We peaked. Then we dropped into recession. Dot-com, the 90s. You look at the early 80s. Every single time we peak, within 12 months, we're in a recession. That, obviously, it's not gospel. It's one line of position that's putting us squarely in recessional shoal water, if you will. All right, let's look at the 10-year, 2-year delta. We are squarely in we're still squarely in a negative where the 2 years yielding more than the 10-year. Again, another sign that we're in a recession. Just like GDP being negative for 2 quarters in a row, that's not the tell-all, be-all, but it is one line of position. Boom. Another line of position. Boom. And a third. That puts us squarely into a recession or into a recession very shortly. So, what does all this mean? I'm not trying to spell doom and gloom. That's not me. I'm an optimist to the nth degree. And in every situation, there's an opportunity. And I'm not going to go over analysis for a second here. I'm going to skip analysis. I'm going to go by the feels. I'm going to go by the feels and the C's, what I see and what I feel. Rates are lower. Demand is up. Inventory is low, but demand is up. This weekend, open houses, they weren't middle of 2022 packed, but there were a lot of people going to open houses this weekend. And they weren't, not at every home. I still talk to realtors who aren't getting any traffic. But if you got a nice home in a good area, you got traffic. People want to buy homes. I had clients submit 6 offers. 2 weeks ago, if I had 6 offers submitted, I was getting 6 accepted offers. Absolutely. But you know what? Of those 6 offers, 2 have been accepted. The 2 that were accepted didn't have any competition. They got seller credits to do a buy down. The other 4, nothing. Why? Competition. Sellers don't have to give a credit if they got 2 or 3 offers on the table, and we're starting to see that. And as rates continue to go down, expect to see more of that. That's the C's, that's my feels. You feel me? If you haven't gotten in the market to buy and you're waiting for the market to crash, I got news for you. All right, the bottom, we've already hit it. Obviously barring anything crazy happening, we've already hit it. All right, so if you're waiting for the bottom, this is kind of my thing here. And I talk to people all the time. I'm going to wait for prices to come down. Bro, they ain't coming down. If you got multiple people making offers, guess what? Sellers are going to get their asking price. As long as they're not stupidly priced. People want to sell. People have been holding off selling because they knew they couldn't sell. But now, with rates being lower, sellers know they can sell, and they're going to put their homes on the market. If you're waiting for the bottom, though, here's why the bottom is past. Past an opening. One, applications, I already talked about. Applications up 25%. Rates have peaked. We are now squarely at a 4-month low. I don't expect this to go back to 7%. I don't expect us to go back into the high 6s. I expect that we're going to stay low 6s and then steadily stay and get really comfortable in the 5s for a good period of time. Last quarter, my last 3 months, October, November, December, that's all I talked about was seller concessions. Seller buy, 2-1 buy down, 1-1 buy down. Nearly every single one of my purchase contracts had some seller concession. I just told you, I had 6 offers this week. 4 didn't get accepted. They all asked for credit. Somebody came in and wasn't asking for credit. That's and the one of the ones that got accepted didn't get a credit. Home builder sentiment. Home builder sentiment is still negative, but for the first time in a year, it actually inched up. It inched up to like 34. Again, this index goes from 0 to 100. Anything above 50 is expansion. Below 50 is contraction. But we actually kind of turned it, and we're up for home builder sentiment. And inventory, I already told you, inventory is at a low. Existing home sales at a low. Hasn't been this low since 2011. I think we've hit the bottom. I think we hit the bottom in December. January is looking good. February is looking good. If you're a buyer sitting on the sidelines, waiting for prices to come down, I think you might be missing out. Okay, you might be missing out. So those are my thoughts. Those are my feels. Any questions? I love comments. I get comments all the time. I try to make this as easy to understand as possible. Show some graphs. I love graphs. If you have any questions, if you think I'm wrong, I'm cool with that. We all got opinions. Let me know. I'd love to hear it. And let's engage in a discussion and comment, subscribe, and share. Please share this because I love doing this stuff. I love talking about this. This is one of the first things I do when I wake up in the morning is I look at the market. I look at what's going on. And this way you don't have to. Just trust me. All right. Hey, that's all I got for you. Have a great weekend. Aloha.